if we're talking about meme coins as an attention asset class, you need to be sufficiently large before you get the most amount of inflow into your project. So if I'm not sitting at my computer all day, I don't have time to try to find the next, $10 million to $500 million market cap meme coin, then once something crosses 100 million to 200 million market cap, and I somehow hear about it, whether it's on Twitter or somebody mentions it on a podcast or somebody's chatting about it in a chat that I follow, then I'll ape, because okay, it's proven that it has enough virality to make it across these very hard hurdles, and therefore it's more likely to get Matt Levine and Money Stuff on Bloomberg talking about how dumb it is that these crypto idiots are buying this. Right? When I see that, I want to own that.
Arthur Hayes, the former CEO of BitMEX and a well-known entrepreneur, claims that the concept of cryptocurrency's set 4-year cycles is officially gone. He maintains that liquidity, a dynamic force influenced by international monetary policy, is the real power propelling the cryptocurrency markets rather than time-based cycles. Hayes connects the Federal Reserve's policies to the explosive movements of cryptocurrency in an engaging debate. He emphasizes how the Fed's activities unleashed an inflow of cash into the economy, such as its reverse repo facility. As that liquidity decreased over the course of the following 2 years, it prepared the way for the subsequent cryptocurrency boom, which sent Bitcoin, Ethereum, and other assets to all-time highs. According to Hayes, liquidity affects everything, including your cost of living and investment portfolio, so it's not only cryptocurrency. Additionally, he thinks we're about to witness a new wave of cryptocurrency powered by liquidity, given the continued implementation of tough fiscal measures. Watch as we dive into Arthur Hayes' insights on how money markets are reshaping the future of cryptocurrency. If you enjoy content like this, don't forget to like, subscribe, and hit the notification bell for daily updates.
Someone else asked me this, like, it's going to be the 4-year cycle. Like,
yeah.
Why try to be prescriptive? Just adapt to what is. I think if you try to put these prescriptive, it's a 4-year cycle, therefore in the second or third year, whatever it is, I must do this. Well, okay, if everyone does that, then you don't get the result of the past. So I don't know how many years this cycle is.
It doesn't even matter.
It doesn't matter.
Yeah.
Look at the liquidity cycle. Bitcoin, I think, for the first time, is very clearly directly related to liquidity. And China was in the past. It was the dollar this time. Maybe it goes back to China and then maybe the global aggregate. But the tech is solid. The tech changes less and less, obviously, as Bitcoin gets older and older. And the thing that really matters is how much fiat is being debased. How fast, from where, what's the pipe? Understand that. And I think you get a much better sense of where Bitcoin and crypto goes. Is it a 4-year cycle? I don't know. Could be 4, could be 5, could be 6, could be 10. I don't know. It doesn't matter. I still haven't gotten all the numbers together, but essentially, if you take a look at, so let's say post FTX blow up, right? Solana went down to $7, and now it's at 170 or 760, something like that, right? Like amazing performance. And ETH went from 1,200 to 2,500, kind of like double-ish, right? So like, why has Solana done so well? Well, on a sort of percentage change basis, the profitability, if you own Sol and stake it and become a validator, has dramatically improved over the past sort of 18 to 24 months. And it correlates perfectly with the rise in the price, right? Revenue's up because transactions are higher. You have you have MEV, you have the sort of the priority fees and all these sort of things, and and the validated rewards from being a validator, right? So the profitability of the chain has improved dramatically, and therefore the price has done very well. Now, ETH already came into this thing as the top dog, right, in terms of like size of the network, and so on a rate of change basis, obviously didn't go down as much either, right? Solana went from 250 to 7. ETH went from, I don't know what, like 3,000 to 1,200.
Yeah.
50% decline.
4,500, yeah, something like that.
And so, but everyone in ETH thinks, it should be up 10,000. Well, show me $10,000 worth of improvement in the underlying metrics of the percentage of circulating supply that has been burnt because there's been transactions on the network. And so that hasn't happened, and therefore the price hasn't gone anywhere. But law of large numbers tells me that as Solana gets larger, it's harder and harder to replicate those past returns. And so a lot of the tourists who are in Solana, because it's done so well from 7 to 170 or 160, because things have improved off of a very low base, right? The network had just started almost when FTX blew up. Well, you're not going to replicate that again. So it's going to be hard going forward to replicate the past success. And I think once that narrative shifts and they get a bit of sour grapes, then you start seeing more sort of like activity back in ETH. They're like, guess what? ETH L1 plus sum of L2 transaction volume is higher than Solana. The transaction fees are coming down. It's more secure because in a proof of stake situation, it's got a higher total notional value of the network. Therefore, it's more secure. And if we believe that there's dangerous state actors or corporations that want to take down competing sort of free association of people using compute, then wouldn't you want the strongest chain, which is the one that has the most value, to be slashed? So I think all these things start to matter when the velocity of change slows down in Solana, because it's past success breeds future failure.
The notion that Bitcoin markets follow a set 4-year cycle is contested by Arthur Hayes, who contends that strict adherence to this antiquated theory can result in lost opportunities. Rather, he emphasizes the increasing significance of global liquidity trends, which currently influence Bitcoin's performance more than they did in the past. Bitcoin's price fluctuations, which were formerly correlated with the US dollar, are now more closely linked to global liquidity patterns, particularly in large economies like China. According to Hayes, liquidity dynamics and the depreciation of fiat currencies, rather than merely technological advancements, are the true forces behind the valuation of cryptocurrencies. He also talks about how Ethereum and Solana have different trajectories. Following the FTX collapse, Solana recovered spectacularly, rising from $7 to $170 as a result of enhanced profitability indicators as increased transaction income and validator awards. Hayes anticipates that maintaining such rapid development will become more difficult as Solana ages. As we explore Arthur Hayes' most recent interview in further detail, for more cryptocurrency information, don't forget to press the notification bell, like, and subscribe. Let's get back to the interview.
I think it's so fundamental to what ETH is that unless you're saying that there is no longer any endogenous yield in ETH, the fee is no longer paid in ETH to use the decentralized computer that's hosted on it, I don't think it can ever be money in the way I think about money.
Interesting. So you think because it has utility?
If ETH went to $100 million per ETH, that's actually a problem. Because if it's too expensive to use ETH as the commodity that runs the computer, then nobody uses the computer. And so there is a price at which ETH is too expensive, and then it becomes not useful anymore. If the price of oil went to $1 billion per barrel, then the economy collapses and nobody uses oil anymore because it's too expensive. It's the most developers. And if we think about the most innovative new things in DeFi or infrastructure, they all start on ETH. Solana, there's copied on Solana, maybe it runs faster or whatever, but they start on ETH. And so I still think ETH is sort of the daddy chain. It sponsors all the ideas. It has some of the smartest people developing new things to take this industry forward. And therefore, I think it's, on a long-term basis, a better asset to hold. I love trading Solana. It's great. It's liquid. It moves fast. It's got a very good community. Do I want to hold, a large portion of my portfolio in Solana? No. I don't have the exact number, but there were some pumped up fun statistics in terms of the longevity of a meme coin at particular nominal values of market cap, and the percentage of the total supply of all coins issued that made it to that level. So to get over a $500 million market cap is there might be less than 50 of these things.
Right. Yeah, it's like one in 100,000 or something.
Yeah. And so, but obviously, if we're talking about meme coins as an attention asset class, you need to be sufficiently large before you get the most amount of inflow into your project. So if I'm not sitting at my computer all day, I don't have time to try to find the next, $10 million to $500 million market cap meme coin, then once something crosses 100 million to 200 million market cap, and I somehow hear about it, whether it's on Twitter or somebody mentions it on a podcast or somebody's chatting about it in a chat that I follow, then I'll ape. Because, okay, it's proven that it has enough virality to make it across these very hard hurdles, and therefore it's more likely to get, Matt Levine and Money Stuff on Bloomberg talking about how dumb it is that these crypto idiots are buying this. Right? When I see that, I want to own that because he's talking about it, he heard about it. So that means all these other Muppets are going to buy it too now.
Arthur Hayes offers a thorough analysis of the changing dynamics of cryptocurrency marketplaces with a particular emphasis on Ethereum, Solana, and meme coins. He emphasizes Ethereum's dual function as the cornerstone of blockchain innovation and as a utility-driven asset. Ethereum's value must be balanced, according to Hayes, since if it increases too much, transaction fees would become unaffordable, essentially rendering it useless as the decentralized computer that underpins a large portion of DeFi. Hayes, on the other hand, thinks Solana Solana is a great option for aggressive trading because of its quickness, liquidity, and lively community. Nevertheless, he believes that Solana is less dependable for long-term investments because its ecosystem is maturing, making a recurrence of its spectacular recovery from $7 to $170 unlikely. He also explores meme coins' speculative nature, referring to them as a attention asset class. For meme currencies to demonstrate their virality and garner broad attention, they need to reach certain benchmarks, such a $100 million market capitalization. In a hilarious observation, Hayes notes that when critics start making fun of these coins, it usually indicates a larger surge in market activity, which makes them intriguing, speculative investments. In the end, Hayes' observations clarified how innovation, utility, and speculation interact in cryptocurrency markets. Ethereum continues to be the mainstay of blockchain development. Solana provides high-frequency traders with chances. All of these factors show how crucial it is to comprehend market forces in order to make wise investing choices in the always shifting cryptocurrency industry. That's all for today. Until next time, happy investing.